Hello and welcome. I had a request from an old friend of mine who happened to ask me a little bit about cryptocurrency trading. He requested that I kind of put together um, a beginner intro video to trading and a little bit about crypto and this and that. So I figured I'd do that, considering he was trying to watch some of my other videos there. He didn't get any of the terminology, and I can understand that because I was just going off talking trader lingo, if you will. So I thought I'd take some time to put together a little quick beginner video. So I'm gonna go ahead and do that. Um, so cryptocurrency. Uh, there's a lot of cryptos out there. um, uh, so what we can do is to get an idea of what kind of cryptos there are out there. The best place to go is CoinMarketCap, and CoinMarketCap.com is where you can see all of these kinds of cryptos, the top cryptos and whatnot, and you can kind of see like their market caps, which is simply the current price times the circulating supply. You can see the trading volume. This is a trading volume over a 24-hour period. So you can see here that there's 17 billion traded a day. That's quite significant. And you can see here with Ethereum, you have 8 billion traded a day. So Bitcoin is the king of cryptos, if you will. It's the first one out there. So it has the most attention and focus, and obviously it has a really high price too. So there's Bitcoin. The second one in market capitalization is Ethereum. Ethereum focuses on building these decentralized applications on the Ethereum blockchain. If you're curious about what blockchain is, and Bitcoin and Ethereum and Ripple and all these other things, feel free to just research a little bit into it. I'm not going to start talking about the technicals of blockchain and stuff like that. It's a lot to get into, and just know that it's kind of a revolutionary way to send money. And Bitcoin is called the digital gold. If it will hold that status, I don't know. But we'll see in the future. And for now, Bitcoin really across history has been closing higher year after year, meaning the price January 1st of each year is higher than the previous year on January 1st. So far, it's a pretty good asset to hold in terms of growing your money and as an investment and whatnot. But we are here to talk about trading. So I just wanted to give a kind of like an overview of what kind of cryptos there are out there. You got you got a bunch, right? And if you're interested, you can always research into the projects, see what they're after. A lot of different cryptos are trying to tackle different things. So if you're interested and you want to kind of invest based on fundamentals for the long term, maybe, please go ahead and look into it. Other than that, that's at CoinMarketCap. So feel free to kind of explore that website if you want, and you can kind of see what's out there. So let's go right into trading. So what I like to use for charts, to look at my charts for trading, is tradingview.com. And so if you go to tradingview.com, this is just auto completing here. You go to tradingview.com, you'll get a website like this. So pretty much what you have is TradingView is a platform where you can chart and you can see the charts of different assets. It's not purely crypto. You got the S&P 500, you got NASDAQ, you got crude oil, gold, many more, but we're focusing on crypto today, so let's just focus on that. You can see here, there's this taskbar, if you will. You can check out ideas for different asset classes. So let's just go under ideas to asset class to cryptocurrencies. And here you can see a bunch of people post their ideas of where price might go in the short term and the long term. It really doesn't matter. You can kind of post anything. There's some people that are more reputable. You can see all-time top author. You got some pros, you got some premiums. However, the idea with this would be to really develop your own trading strategy, and maybe look at some of these ideas and incorporate them into your trading strategy, or see if they kind of line up with your trading or with your projections, and kind of use it in conjunction like that, right? You don't want to go purely off what these people say. You don't know, right? Obviously, some people might make better calls, some might make worse calls, but how the market goes is there's always got to be a buyer, and there's always got to be a seller, and there's always a winner, and there's always a loser. So that means that when the price of Bitcoin peaked at $20,000 US, someone was willing to buy it at that price before it came tumbling down. Within a matter of within a week or two, it came tumbling down to 6,000, right? And so that's the thing, right? So just be aware that some of these people are going to be right, some of these people are going to be wrong. So be cautious when you're kind of looking through these ideas. I do look through them myself, just for curiosity, but at the end of the day, I do my own trading strategy, and I try to make my own projections, and I'll use these ideas kind of as a reinforcement of what might happen or what I think will happen. So these are the ideas. And you can see on each idea, you can see which asset it is. You can see the time frame. So this is a weekly chart, meaning each candlestick is represented by a week, and we'll get into that in a second here. You can see some people do hourlies, some people do dailies, right? Hourly, 4 hour, things like that. So let's go right into the charts. So you can see here, if you can, there's a link here for the asset. If you click on the link to the asset, you'll get this, and you'll have, so I clicked on Bitcoin, and you can see here that you have all your different kinds of exchanges, and exchanges are exactly what they sound, right? Exactly what they sound like. I'm sorry. Oh man, my tongue's getting twisted. I'm still not 100% used to doing the podcast, but I'm trying my best. It is a little bit late too, but whatever, that's besides the point. So exchanges here. See, there's Bitstamp, there's Coinbase, there's Bitfinex, there's Bybit, Bittrex, Gemini, Forex. It's all there, right? And and exchanges are literally what they sound like. You go on there to exchange your Bitcoin for dollars, or your dollars for Bitcoin, or you can trade your Bitcoin for a different crypto, which is maybe you want to trade your Bitcoin for XRP, or you trade your XRP for Bitcoin, Ethereum, back and forth, for literally hundreds and thousands of cryptocurrencies out there, or whatever the exchange may be offering as a cryptocurrency, right? So if we click on the full feature chart, this is where the charting happens. So if you're new and you've never used TradingView before, your list on the right here is going to be empty. Obviously, you can just go to add symbol here, and you can go BTC, and it'll give you all these kinds of pairs, right? You got BTC compared to the US dollar on Coinbase, Bitfinex, HitBTC, Bitstamp, Binance, tons of different exchanges offering Bitcoins, Bitcoin trading. So let's break down this chart a little bit. So right now we're looking at the Bitcoin US dollar pair. So that means Bitcoin represented in price of US dollars on Coinbase. And you can see here we can change the time frames, and I'll go over the significance of the time frames in a little bit here, but essentially if we click on the 1 day, for example, click on the 1 day, and you can see here that there's these candlesticks, right? And pretty much that's what each of these bars is called, is a candlestick. And each of these candlesticks represents a movement in the price of Bitcoin in particular here, because we're looking at a Bitcoin chart. Now you can see that there's green candles and there's red candles. So because I'm looking at the daily chart, as you can see here, I chose 1 day, and you can see that each of these candles represents the movement in price over a period of 24 hours or a day. A green candle means that price has risen within that day, and a red candle means that price has dropped within that day. Now you can see that there's kind of an anatomy of a candle here, so I'll break it down for you. You kind of have the body of the candle, which is this kind of filled in part here. That's the body of the candle. And you can see that there's also these lines, or what they're called, candlestick wicks, attached to these bodies of the candles. So what do those mean? If we take a look at September 24th, we can see that it is a red candle. And we can see that at the top of the body is where price opened on that particular day. So as soon as September 24th started, that's what this candle represents. Price started right here at 9,000, let's just call it 9,700 is where price opened on the 24th of September. The bottom of the body is where price closed on that particular day. So on the 24th of September, once that day ended, price closed exactly at 8,530. Now these wicks represent movement throughout the day. So that means that throughout the day, price at some point was all the way up here at 9,700. And it at some point during the day, price was all the way down at 8,162. So essentially that means that throughout the whole day, this is your kind of a range of price that Bitcoin moved. But at the end of the day, it closed down here and it opened up here, meaning at the start of the day, this is where price was at, and at the end of the day, price was right here. So that's what represents that. And it's a red one, right? So price closed lower than price opened that day. And similarly, or conversely, I should say, with a green candle, you can see that price started at 9,758 on the 2nd of September, and it closed at 10,380 at the end of the 2nd of September. Pretty simple stuff. So that's kind of the anatomy of a candle. And as we change our time frame, so if I was to choose a 4-hour, well, now each candle represents a 4-hour period, right? Just like the daily chart, each candle represented a full day of movement. You can see here that on the 24th of September at 5 a.m., this is the range of price that it moved at 5 a.m., from 5 a.m. to 9 a.m., then from 9 a.m., 4 hours from 9 a.m., we move to 1 p.m., right? And so we can keep moving down if we'd like. We can do an hour, and we can see that each candlestick is represented by price movement within that hour. So it gives us a little more of a messy picture, if you will, because now you're looking at, so many different candles. Whereas on the daily, one candle will represent a day. Now 24 candles here would represent a day. So that's kind of the basics there. You can, use whatever time frame you'd like. However, I do recommend that you kind of stick to the higher time frames. It paints a cleaner picture and it can give you more precise entries and exits on trades. But we'll go into that a little bit later. So that's kind of your anatomy of a candlestick. So now we can see that we have these sorts of tools on the left hand side in TradingView. So what we can do is, for example, two fundamental things that I want to talk about trading, definitely for this intro video, is the first one is support and resistance. So what is support and resistance? Support is the floor of the price over a given period, and resistance is the ceiling of a price over a given period. So let's take a look at an example of support and resistance. And I actually was looking at a really good example here, which I'd like to point out. So if we draw a line, so this line represents support and or resistance. There we go. So here you can see, we could probably make it even a little cleaner if I can move this, which I don't think I can. Oh, it's locked for some reason. Give me a sec. There we go. All right. If we did something like that. So what are we looking at here? From on the 2nd of April in 2019, so just this last April, price came from 4,000 all the way to about 5,000. You can see it's slowly kind of trending up, except that you can see here there's a on the 23rd of April, it hit this spot and it kind of really rejected off this sort of resistance line, which means that there was a lot of selling pressure at this area and price came tumbling down. Then you can see we found support here. I'll even draw another line for you guys. Let's even call 5,000 our area of support. So now we have two lines, right? So now you can see price broke through, it kind of came up, it found support down on this line, support or floor of the price. You know, a little bit of indecision, not sure what's really going on. It came up, it found a resistance at the top here. It came down, it found support again at 5,000, and then it came up and it broke through, price broke through this area of support. Came back down, and now look at this. Now these candles are bouncing off what was once our resistance. So now this is called resistance that has turned support, right? It was once resistance in the past. Price was unable to break through it, but then when price did break through it, it came back down. It used this resistance as support, and then sure enough, it went higher. And you can see this throughout, you know, you can draw these lines anywhere on the chart and kind of use it for your analysis. So let's take a look at another example here. And this was a pretty good one until recently, but let's take a look at it anyways. Okay, so what are we looking at here? No, well, actually, I should probably move this up a bit. There we go. All right, so what are we looking here? After we broke through this resistance down here around 5,600, price came up. Let's even draw another one. Why the hell not, right? Just to illustrate this clearly. So you can see here, it came up. It found resistance here, broke through, broke down, kind of a fake out move, came back up, found support at around 7,600-ish, came up, came down, found support again, came up. So, and then in a period of 3 days, it found resistance here, broke through resistance, went all the way up to 14,000, came down, almost touched it as support, but not quite. Came back up, came down, touched this previous resistance, now support, came back up, support, came back up, came down, support, came up, come down, support, up, down, and it finally broke through this support. And it came crashing down, and now we're back in this sort of area, which you can see that now, if we even extend this line, we can see that this area was also an area of, way back in May, it was an area of support, and now it's also an area of support, and it looks like we're going to come up and touch this, although we don't know if that will do it or not. I guess we'll see. That's kind of the basic idea between support and resistance. You have resistance that can be turned support, and you have support that can be turned resistance, kind of like in this case here. Once price comes here, I expect a lot of selling pressure to occur right around this area in 9,300, just because it was major support before. And I'd expect it to be major resistance on our way back up there. So that's your basic idea. Another concept that I kind of wanted to go over. Let me just delete these guys. Is Fibonacci retracements. And Fibonacci sequence and the golden ratio and Fibonacci ratios and all that good stuff. It's really interesting because Bitcoin in particular loves to follow these Fibonacci retracements, and I'll show you what they are in a second. But the Fibonacci sequences, they occur naturally throughout the world and throughout the universe. From the if you look at your hand and the height of your fingers, those are all approximately, the next finger is approximately taller by a Fibonacci ratio and whatnot. When you see a beautiful person and you look at their face and you perceive them as beautiful, they're said to have a very good Fibonacci proportions in their face and stuff like that, and that's why you perceive them as beautiful. The nicest supercars in the world use Fibonacci ratios so that they are appealing to consumers. And you can look into it. It's very interesting. But interestingly enough, it's also... Oh, geez, what the hell did I just do? Interestingly enough, this also applies to trading. And so let me just draw out a fib retracement here. And I believe this was our low here. So what you want to do is you want to you want to pretty much catch a high of a price and catch a low of a price, and that's kind of going to be your Fibonacci trend when price is moving in between those two ranges. So price was moving in between 9,071 and 13,868 for a couple of months. That was kind of the range Bitcoin was playing. So if I just edit this, because what I like to do is I like to edit the Fibonacci retracement, and I like to remove the 0.5 because it's sort of insignificant when it comes to crypto anyways. And so what can we see? We can see after we hit our high, we came all the way down and we almost touched this Fibonacci. Not quite, but we almost got there. We came back up, came back down, we came up. Right at the 0.618 Fibonacci retracement around $12,000, it touched it perfectly. It came down, it touched $10,000 quite perfectly. It came back up, it touched 12,800 perfectly. It came down, touched this, bounced back up. And you can kind of see how the price of Bitcoin is playing off of these levels, and it's very quite interesting. Like look how beautifully this level played out. Like all the way down from here, from 9,000. It pretty much bounced off that level and it went all the way up to 12,000, and it literally topped out at that level. Went a bit above, but for the most part, it topped out at that level. Came back down. You can see that now we're kind of playing off this 0.236 Fibonacci retracement. Came back up. 10,900 came back down. We're playing off it. We come back down. We come back up. We touch it again. Come back down. And then finally we broke through. And now we actually should be drawing a new one for the fact that we broke through our initial low, right? We should be drawing another one. So those are two kinds of basic things that I kind of look at, and I think are fundamental when it comes to trading, and when you're trading, you want to have targets, right? You want to have entry targets. You want to analyze it, and then you want to see like, hey, where am I going to exit this trade and take my profits? Because I mean, you could buy Bitcoin for the long term, right? If you're looking 5 years into the future, you could buy it, hold it, and see what price is in a bit, right? But I like to trade. We're talking about trading, so I'll stick to that. And so I guess the next question would be, well, Art, where can I trade? So you can trade anywhere, really. I mean, I use an app on my phone called ShakePay to buy my crypto. ShakePay is just like an iPhone app where you can literally just e-transfer them money and they'll credit your account with that money, and then you can buy Bitcoin right on your app, and then it's on your phone and you can send it to wherever. And you can also go on Binance. There's tons of exchanges. Binance, HitBTC. You can fund all these exchanges with cryptocurrency, and you can trade it for whatever you want. But I'm just going to jump right into margin trading on BitMEX. So I'm going to use a testnet for this kind of tutorial. Just log in here. All right, so this is the BitMEX testnet. So when you log in, the testnet is kind of like a testing ground, right? It'll credit you with fake money, and you can trade and you can execute trades, and you can see how they play out based on, your trading strategy. So it's literally no risk, right? It's the exact same as real trading, except you're not actually making any money. You're just growing your play money, if you will, or losing it. And so the actual BitMEX platform where you're using real money looks exactly like this. Oh, excuse me. So let's go over a little bit of stuff here. You can see that here you have different kind of orders that you can place, right? So let's start with market. What is a market order? A market order is you want to buy that amount of Bitcoin literally at the current price, right? So you can see we can either buy or sell, and I'll go into long and short in a second here. But you can see that we can see the price here, 8,561.5 currently. So if you want to buy it right now at that price, or you want to sell right now at that price, you can do so by using market orders. Now you can see here I have an available balance, right? And here you can see the cost of what I'm trying to buy. So let's just go 300. 300 is going to cost me 0.0351 BTC. I don't have quite enough, so let's bring it down a bit. Sure, let's go with 250. So you can see the cost here is lower than my available balance. So what's buying and what's selling? So in trading terms, this is called going long or going short. So going long is essentially a bet that price will go up in the future. And shorting is essentially a bet that price will go down in the future. So going long makes sense, right? You buy at a cheap price, you sell at a high price. Now shorting is you can still make money if price goes down. So essentially what you're doing when you're shorting is you're borrowing money from the exchange and you're saying, hey, I want to buy, let's say I want to buy 1 Bitcoin and I'm going to sell it at the current price and I will give you back 1 Bitcoin regardless of what price it is in the future. So let's say I buy a Bitcoin at $10,000 but I'm shorting it. So I would sell that Bitcoin at $10,000 for $10,000. Now let's say in the future, let's say a month from the day I buy it, Bitcoin's price goes down to 5,000, for example. So now I would buy a Bitcoin for 5,000. I would return that Bitcoin to the exchange, but I would keep any leftover profits. So I'd have a profit of $5,000. I'm returning 1 Bitcoin for $5,000, previously sold for $10,000. I have $5,000 profit. So that's how shorting works. So it's pretty cool. You can make money on the way up and you can make money on the way down. It's pretty cool. So if you can snipe your entries pretty good, you can make profit both ways. Now, on BitMEX, you can leverage your money. And what does that mean? Some people think, like in traditional markets, that you could actually end up owing money to the exchange, but that's not the case. What BitMEX allows you to do is use whatever you put into the account as collateral if you leverage. So let's use 10 times leverage, for example. If I have $1,000 and I leverage 10 times my money, it's as if I would be trading with $10,000. However, if price, you only have $1,000 backing that $10,000 really, right? So you're leveraging, you're borrowing money from the exchange. You're saying, hey, I want to leverage 10 times my money so that I can make more profit because I want to trade like I'm trading $10,000 instead of just $1,000. So I would borrow money from the exchange. And let's say price goes up 10%. Well, 10% of $10,000 is $1,000. So I made $1,000. So essentially I doubled what I initially had. I initially had $1,000. I made $1,000. Now I have $2,000. However, if price goes down 10%, so if you're leveraged from $1,000 up to $10,000 and price goes down 10%, what's 10,000 minus 10%? It's 9,000, which is exactly what you put in initially as your initial deposit, right? So at that point, your trade would be closed out automatically by the exchange and you'd lose that entire $1,000 deposit. Why? Because the exchange doesn't want to lose money by lending you money, right? So they say, okay, well, we recognize that you have $1,000 backed behind this $10,000 trade that you're taking. So we'll let you do that, but you only have a 10% fluctuation in price. And that goes the same for leveraging 5x. Now you have a 20%. Price could go in against you 20%, right? Same with if you go 2 times leverage, then price can go against you 50%. Like you have the wiggle room of 50%, right? And obviously, if you're suicidal and you love losing money, you can go 100 times your money, right? But similarly, you only have a 1% spread at that point, right? So this is just like a surefire way to lose all your money. And when the exchange closes out your position because a trade went against you, it's called getting liquidated. And and you don't want that to happen because you lose your entire deposit and you would have been better off probably just holding it, right? So we like to trade anyways on my podcast and my video cast. I like to do relatively low leverage, and I also like to use stop losses when I'm leveraging. And I guess I'll explain what that is right now. Actually, why don't we just go ahead and take a trade? It's fake money. I'm just going to go ahead and take a trade, right? So here, I'll just close this depth chart, drag this out a little bit. There we go. We have a little bit of a bigger chart. Actually, you know what? I'm just going to close this too. I'll drag this part out. There we go. All right. So let's say I wanted, right now I like the price of Bitcoin. I think it's going to go up in the future. I want to leverage my money to 5 times. As you can see, the cost has gone down because now I can put more money into it, right? I'm leveraging 5 times my money. So 5 times 250 is 1250. So now I can actually put more money into my trade, right? So let's say I want to buy it. Boom. It'll confirm it here. It'll show you where your order value, your cost, your available balance, what you're buying it at, and then also it'll show your liquidation price, right? So here, this is the price at which if Bitcoin drops down to this price, I will lose my entire position. And it'll tell you here, oh, I have 16%. And it's not 20% likely because of their fee, right? They take a little bit of a fee for lending you the money, essentially, right? Let's go ahead and buy it. And you can see here now that I bought $1,250 worth of my money. Or sorry, $1,250 worth of Bitcoin. I have it in a trade now. It'll show you down here, it'll show you your position, it'll show you your entry price, it'll show you the current price, and it'll show you the liquidation price, and then it'll show you your unrealized profit and loss or your return on equity. So you can see since I entered the trade, I've already made 1.14%. Now I've made 1.58%. So looking at this chart, let's say I determine my, I'll just do this. Let's look at the 4 hour. All right. So let's say that I determine my support line to be here. Let's make this a different color and let's make it thicker. Let's make it a nice dark blue. Let's make it nice and thick. All right. So let's say this is my support line, right? You can see I've entered somewhere around here, my trade, and I think that from here it's just going to go up, right? So what can I do in case price goes against me? Obviously, I don't want to wait all the way down to 7,100 or whatever my liquidation price was, right? I don't want to wait all the way down here, like, you know, like if it goes down that far. I mean, I want to be out of the trade by then. So what can we do? What we can do is do something called a stop loss. A stop loss is basically this. You can see here that you have your quantity and your stop price. So I'm in for $12,000 or $1,250. And this, let's say this is my support line, and I'm saying, well, if price goes below here, then I don't really want to be in the trade anymore. So let's say I'm willing to wait to 8,480. If price goes below 8,480, I want to close out the trade and I want to cut my losses. So that's what I'd put here. I'd go 8,480 and you'd go set sell stop. And now you can see that on the chart, you have your stop market trigger, right? And that's where the exchange will and the trade will automatically close if price goes below that. Now, what we also want to do is we want to take some profits if it goes up, right? Like obviously we can't be looking at the charts all day and night. So why don't we just set some targets for profit, right? So we can do kind of the same thing, right? We can go, here, let's do this. Limit. we can go over to limit and we can say, okay, well, let's say I'm seeing that there's pretty significant resistance. Let's say right here. Okay, so right around 8,700. Let's say that, right? So 8,700 is where I want to take my profits. So I can go over to my limit order and I can go 8,700 and I can place a sell at that price. And if I do that, you can see that on the chart, it has placed a sell order at that point. So what I've told it is that if price hits 8,480, close my trade out and cut my losses. If it goes up to 8,700, take all the profits that I make at that point. Right? And that's the basic idea behind margin trading, right? You can obviously use lower leverage, higher leverage, up to your risk tolerance. I wouldn't advise going above 10x, especially if you are just starting out. I've done it before. When I was first starting out, I was going 25x, 50x to try and make a quick buck, and it does not work. The trade goes against you, you get liquidated, and it sucks. So that's the basics of margin trading. And I guess I didn't really go over limit, but I did go over market. So market is buying at the current price. What I can also do is I can set a limit price. So let's say I want to go long. Let's say I'm thinking like, hey, like price might come down to where these previous candles kind of wicked down to, right? And I think that if it comes down that far, that it'll bounce back up. So what I can do is I can place an order around there, right? I can go 8,400. Let's just, what do I have left? 45 for available balance. So let's go 190. And I can do that too, right? And I can buy it. And now you can see that there's an order for 8,400. So if price goes down here, it's going to buy that at that price. And that's it. I really don't know what else to cover. That's kind of the basics of trading. Your basic support and resistance kind of rules. What else to say? If obviously you want to get more into trading, I am running my other podcast for those reasons, right? Trying to make projections, trying to make calls, trying to figure out which way price is going, taking some trades. And you are obviously more than welcome to follow along with me, or shoot me a comment or an email, and you can tell me, and we can swap ideas and we can collaborate or whatever, right? But that's the basics. This is obviously the test net. So if you ever wanted to do real margin trading, you just go to bitmex.com as opposed to testnet.bitmex.com, right? So yeah, you just make an account there, right? You log in and you do your trading there. I don't want to go too much more into it. That's kind of the basics for trading. And like I said, if you're interested in my trading style or what kind of techniques I use, please follow along my other videos. But other than that, I think that covers most of the basics. I'm trying to think on the spot here what else I could do. And like there's thousands of trading styles, you know what I mean? So obviously if you're a beginner, I'm into this 2 years now, I think, and I just started becoming half decent at it. So if you want to follow along, obviously I'm not a professional or anything like that, but if you need somewhere to start, feel free to follow along. Take some trades with me. If you're more comfortable kind of doing your own research, then by all means do that. But, don't jump blindly into it, because that's what I did. And It sucks. You know, it sucks when you get liquidated and you get an email on your phone that says, "Oh, liquidation notice," and you've just, blown your account, and it's just like dead money, So, I'm happy to say that I've recouped all my losses since then, plus some. So I'm happy about that. It took a while and it took a lot of discipline, and it's about kind of predetermining your levels, right? And trying to figure out, hey, where do I want to buy? Where do I want to sell? Where do I want to go long? Where do I want to go short? And sticking to it. And, but also recognizing at the same time when price, when the bias changes, sometimes there's a bullish bias, and, there's some more lingo with, for you. Bullish means, price is going up. Bearish means price is going down, right? So when there's a bullish bias, you can see all the way from, let's say April. From April all the way to June, there was a huge bullish bias where price nearly quadrupled in price. And you can kind of see that from that time, we've been having sort of a bearish bias, right? From that all-time, well, not all-time, but from that high here, from around $14,000, you can see we've just been progressively, and we can even just draw a line here, but you can see we've just progressively been kind of coming down, right? You can see price is kind of following this line over the course of a couple months. Bam, 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 bam. But I guess at the same time, you could also draw this line, right? And you can see price has kind of been respecting that line as well. And you can see that ultimately we broke down from this trend line, and it was quite the dip. As a side note, I think prices to buy Bitcoin right now are great. Prices to buy things like XRP are great right now. I mean, it's just great prices, right? And I know it's tough. It's tough to buy crypto, especially like when it seems like it's down in the dumps, but that's when you want to buy it. You want to buy it when it's cheap. You don't want to buy it when it's at 20,000 like I did when I first bought my very first fraction of Bitcoin 2 years ago. It sucked because it just went down from there, and I thought I was making a great move, a great decision, and oh man, it wasn't. But whatever, you live and you learn. And to be honest, I'm grateful that I did make that choice, because it got me into the crypto space, and it got me down this rabbit hole called crypto trading. Very volatile. However, if it's volatile, it's profitable. You can make some crazy money if you can kind of pinpoint some entries and whatnot. So that's all I kind of have for now as an intro video. I hope it was helpful. If not, let me know. I'll try and elaborate on a little bit more. And yeah, happy trading, and thanks for tuning in. And I love you guys.